It's Iman Olia.
Mr. Cyrus Yari.
What's up?
It's been a pretty chilled week, to be honest with you. Like, nothing much is up. I've just been lifting and eating. That's about it.
That's it's a rare thing to hear from you. So good.
Yeah.
Just lifting and eating.
Yeah. I mean.
So for anyone who's listening or watching, this whole room stinks of broccoli because Iman's on this meal prep thing, and everywhere he goes, he's just taking 5-6 boxes of meal prep with him, and he sticks it in the microwave.
I don't know if it was 2 episodes ago or whatever, we spoke about me getting back in the gym. Well, the gut had to go, the belly had to go, so I had to start eating some greens.
Nice.
Yeah, which is why this place stinks right now.
I think last week we got really excited and spoke for longer than we should have, but hey, we love this, so hey.
No apologies.
So today I wanted to speak with you about where would we invest and why. So yeah, rather than a lot of chit chat, let's get straight to it. Where would you invest and why? And you can answer this in any way you wish. And by the way, this is within tech because that's the only place we really enjoy investing. It doesn't sound like we're very diversified, but hey.
I mean, tech is pretty much diverse now, isn't it? It's
exactly.
So I think it's an interesting question because where would you invest and why could literally mean anything. So buy a house, yeah. Do all of that stuff you need to do to give yourself a little bit of financial security, yes. But in terms of tech investing, my area of expertise, if you will, is energy. And I've been, working in energy for 5 years now, but my investment, the way I think about an investment is, what are the criteria that I want to meet and how quickly do I want to scale that? Mm-hmm. What I mean by that is, do I want a 20x return? Do I want a steady 5x return, which is it's quite a lot, or do I want a really small incremental return over time? Well, if I'm going to do that, I'll just put my money in an index fund. Mm-hmm. But if I want to grow at an exponential rate, what are the different areas that we could invest in? And my answer is energy. The reason I talk about energy is because, well, 2 reasons. Our entire society is built on energy. Everything we do is energy focused, and I'll get into why that is. And the second reason is around, it's one of the largest problems in our society today. Mm-hmm. So even though our entire society is built on it, it's predicated on the fact that it's a massive issue. Our entire society is built on it. Why? Because everything we do, every business we talk about, takes a series of inputs, natural resources, for example, puts them through a shit ton of processes, manufacturing, for example, and then gives you a product, or in some cases a service.
Okay. And
that product and service, that output, is something that throughout its entire life cycle will have required energy to build, to manufacture it, to mine the specific natural resources, etc. So that's why I guess it's important to understand that our entire society is built on it. And then from the second perspective, why is it one of the largest issues? Well, because that process of going from input to output is providing significant amounts of greenhouse gas emissions. It's warming our planet, and it's causing other environmental damage, noise pollution, whatever that may be, but there are other elements that are causing the problems. So therefore, it's already a very noble act, or I wouldn't say noble, but it's a very important area to try to solve. So if I'm going to invest in something, I want it to be something that's solving a massive issue. Sure. Naval talks about this quite a lot as well.
Well, aside from Naval, probably the biggest fan of energy tech and capital allocator right now is Chamath.
Yeah.
Yeah.
I mean, I think we mentioned it in a previous episode, but he had a tender go out to get individuals to respond on how they'd solve the climate crisis. I actually saw that way too late, but I'm going through a process of now thinking, how do you answer that with a friend and colleague? But anyway, point is, I'd look at energy. All right. So we've outlined why I'd look at energy.
So what would you invest in, and what you're most excited about is specifically the energy tech sort of niche?
Well, I mean, let me rephrase that. What I'm interested about is the problem, which is energy related.
Sure.
And the solution that comes out of that, in my opinion, is energy tech.
Okay.
That's what helps us reduce the greenhouse gas emissions, the environmental impacts.
Okay.
The specific, I'm going to answer this, I guess, in two ways, but the specific things I think that are quite important to think about in the energy market are from a B2B lens and a B2C lens. Mm-hmm. B2C is things like energy retail and ensuring that consumers are consuming more fairly, consuming less, and are aware of their consumption.
Yep.
On the B2B side, it's about solving that process problem. So from the B2B side, I guess there are two different areas I'd probably invest in. One is technology that takes us away from fossil fuels. Now, the problem with technology that takes us away from fossil fuels is that it's intermittent. So the sun only shines a certain amount of time during the day, the wind only blows when it can. So you're not going to get energy all the time. What you need is systems that can store that energy and deploy it when and where required. So batteries are the most common thing today. So most likely I'd put my money and hedge it in a battery company. There's a UK company called Moixer, but then more famously there's Tesla. So that would be one of the places I put my money in from the B2B space. The second one, and I think this is quite an overlooked one, is demand side management companies. Companies that own and operate the data in the energy space. Why is that really important? Well, it enables us to manage the load and the system far better. Manage demand and supply of our energy requirements far better. So demand side management companies I'd invest in. And then finally, from a B2C perspective, I guess this is where things get a little bit more complicated. What you're trying to do is solve a process issue at the B2C level, which is people consuming too much. But you're also trying to change people's behaviors. So I'd invest in companies that are looking to change people's behaviors around how they spend their energy.
So like what, let's say carbon footprint. Okay.
Carbon companies. Like
when you said casino before, you mentioned carbon footprint. I thought every tech bro right now is screaming probably Tesla.
Well, from a B2C perspective, what does Tesla do? Tesla does rooftop solar. It has its own battery. And they've integrated themselves quite well with companies like Octopus Energy, which is a UK energy retailer, to offer that service as part of your energy bill. Okay. So people that tend to take that on are early adopters currently, and they are people who are energy conscious already. How do you change how do you change the people that aren't early adopters? How do you change the long tail of people that don't care about energy right now? Yeah. And so I'd look for companies to invest in like that. We actually have a mutual friend who's doing a business in this space. He's just started it. So, I think that's a great initiative to move forward. But then I'd also invest in energy management data companies for the household. Okay, so explain in more average Joe terms, because a lot of people listening, I'm super excited when you explain this stuff to me, but the average person is probably yawning because they're like, I don't understand this. So in layman's terms, what is that, and why should people invest, or why is it exciting for the world? All of your energy usage, everything you do from an energy perspective is hardly recorded. So what that means is you use your cooker, turn on the washing machine. Cook your broccoli, meal prep in the microwave. Well, I chucked it in the microwave, didn't I? But your fridge, right? These things all use energy. A lot of people are paying for their energy bills based on assumed or predicted usage. It's not the actual usage, it's what the energy company is telling you you're probably using. And it's a combination of you calling up and saying how much energy you've used from your meter reading. All boring shit, right? Well, how do you sexy that up? Well, the way you sexy that up is you get smart meters in people's homes that immediately read at any given time how much energy you're using. But you get companies that can do stuff with that data. Right. Machine learning companies. They can figure out what the hell is going on with your energy usage and then save you money by telling you you're using this thing at the wrong time. Use it at a time when energy is cheaper. So predictive intelligence? Partially, yeah. So a part of the machine learning algorithms would be used are predictive intelligence, but fundamentally it can be even simpler than that. It can just be using a historic view of a big group of people of how they use energy in their home teach a machine to learn how that changes for different scenarios, and then build that bank of data and apply that data to any household. So then from there, that algorithm can then learn and build on itself and develop further for each individual household. Anyway, the point is, I'd invest in those types of companies because they're solving a global issue, they're changing the way people live, and they're going to be integral to our way of living. Nothing will ever change around us using energy. We always will use energy. In fact, we're going to use more. So those are the types of companies I've invested in.
Awesome. No, that gets me super excited, especially when he says machine learning, and how that, and the key word in everything you explained it near the end was data, which I think is where I was having a discussion with a few people last week, one of whom is a machine learning engineer, talking about, is it overhyped? Because if you look at the last 20-30 years of tech, in like the 80s, people would do PhDs in artificial intelligence. Now everyone's doing like PhDs in machine learning. It's like every 5 to 10 years there's a cycle of there's a new trend. Like 5 years ago it might have been like blockchain or whatever. And they're all branches of the computer science field. But I still feel like machine learning is not really one that's here for 5 years. I feel like it's here to stay. And there's a lot of work going into, I think the guys at 80,000hours.org who give like amazing career advice on how to have an impactful career. They cover, yes, you can earn a lot of money being, let's say, I think it's a machine learning researcher or engineer or both of those. But if you really want to help change the world, and because that technology can bring about a lot of dangers with it that we don't know yet. If you want to make a real impact, you care more about impact than earnings, then you can look into policy making around AI and machine learning. But anyway, it's a space that I don't think is a fad. Like some people think it's just a 5 to 10 year trend. I think it's here to stay, and I'm super excited by it. Yes, it does have its cons as well, but with the right safeguards, I think it can really change all of our lives in a way that if we look at, again, I've quoted this book before, Matt Ridley's The Rational Optimist, which is an amazing read. He talks about our evolution over the last few centuries and how the past century has just been insane, exponential growth in terms of just everything to do with the condition of our lives, and how he's so optimistic going into the next century. But I'd probably be even more optimistic than him, given advancements and developments of things like what you just explained, and how to positively and usefully sort of leverage data to improve all aspects of life, one being energy.
The types of people that say that machine learning isn't a thing or that it's a fad probably don't realize the extent to which AI runs our society today. So pretty much everything you do, from the moment you wake up, look at your phone, everything you're doing is driven by some form of machine learning algorithm.
Correct.
So yeah, those guys are idiots.
That's the machine learning that I'm against.
Yeah.
And again, look, I won't go into this. Recently, The Social Dilemma came out on Netflix. A lot of people I know in the Valley are not happy with it because they say they only cover one side of the argument. People who have worked at Facebook or are working at Facebook have told me what they think. Fundamentally, when you look at it, when I look at it from, let's say I'm being selfish, I'm like, okay, if I have a younger cousin, or let's say any of us have kids in the future, or those that are raising kids now, Chamath is a great example, and I'm a huge believer in what he does, which is he gives his kids 0 devices. He's like, if you want a device, you can go and work in Burger King like I did when I was a teenager, and you can do whatever you want with that money within reason. So it's like the generation, I mean, we're millennials, but is it Gen Zs after us? I don't keep up with this.
Yeah, probably something like that.
It's those born after 96. Their attention span is horrific. If you just look at them, if you just sit in a Starbucks, like once I was doing emails in Starbucks, this was pre-COVID, and across me was a bunch of teenagers, and they was there to study, but you can
exactly.
their heads in another place. As Chamath says in his Stanford MBA speech, you are literally being programmed, driven by very shallow likes and recognition.
Yeah.
anyway, I think that in itself is a whole separate episode that me and you can cover.
But it is an example.
But those are the dangers of using our data and machine learning to sort of program us and keep feeding us what they know will keep clicking that we will like, but it's not good for us. Where if I'm going onto YouTube and the algorithm, it's just spitting at me all this content, which my rational side, the rational part of me is like, that's not good for you, just delete the app. But then there's innate human side of me which is like dopamine, click.
Well, it's a biological reaction that you have no control over. So even if you are as rational as these two fellas up here, Buffett and Munger, you're still going to fall for the trap.
Of course, which is why, as you know, I deleted Instagram a while ago.
Yeah. I can't send you memes anymore.
but even now, look, it's a struggle. This is why, for anyone who's struggling with social media usage or just productivity when you're working, just go read Cal Newport. That's probably a good place to start.
Which one?
Deep Work and then Digital Minimalism.
Yeah.
Anyway,
where would you invest?
Where would I invest? So 2 areas. One would probably be, so here's a theory I have. Areas which are sort of more traditional, which are ripe for disruption, boring industries. One that I had experience in is the real estate industry. I'll try and be very brief. I know I go on tangents. As I said in the first episode, I spent a few months where I launched a Proptech co-living company and we invested in some real estate. And I'm so thankful and glad that we didn't expand, because now that COVID's hit, it would have been a headache and ball ache. But even before COVID hit, I got out. Why? Because property is, in my mind, the most archaic, miserable and disastrous industry out there, full of scumbags. Let me unpack that. So, tenant calls you, boiler's broken. This is broken. That's broken. That guy keeps cooking smelly food. Dude, I don't care. I know as a person who runs a business, my number one goal is to be customer obsessed. And I don't care about their problems that they tell me, but I do. I end up fixing it straight away. Instantly, we get it fixed. I message someone, I call someone, but my point being, it's fine for some people, great, kudos to you, just self-aware of what you like. I don't like that. Going back to me and you, what we love is Naval's whole idea of scalable businesses and using leverage. I feel like that's not a very scalable business model. I like code-based and media-based businesses.
Yeah.
So 1, it's messy, it's not as scalable as code and media. 2, really the main reason I don't enjoy it, I love code and media, I love the tech industry. It's not intellectually stimulating, real estate. And you're just dealing with all due respect, you're dealing with a lot of stupid people and low IQ people. What do I mean by that? Just go, everyone listening has dealt with estate agents, everyone listening has dealt with various stakeholders within the real estate space. Some are phenomenal, some are fantastic, and those are the ones that I have in my phone book because it takes a lot of trial and error. But it's a disastrous industry, and a lot of the documentation, processes, this, that, it's very old school. And industries which are old school, I mean, 5 to 10 years ago, they said the type of businesses that you should be building are taking verticals off of, like, let's say, for example, Craigslist, right? Craigslist had sections. Is Craigslist still around? I think it is. We're in the UK, I don't know. So Craigslist, it's always had sections, like one is cars, sell your car, sell your home. I think it's even got a dating section, apartment rental section, all of these things. So what people did, Airbnb said, fine, we're going to take the short-term rental that Craigslist is doing, but we're going to put it online. We're essentially going to leverage code. Car, let's say in the UK we have Auto Trader online, they took the car section. Zoopla took, let's say, or in the US I think it's like Open Door, or these companies that you can list homes. They said, fine, we'll take the property section. Tinder and Bumble took the dating section. But there are still parts of real estate. What I'm trying to get at here is, once you go into real estate, fine, you've bought and sold the home, fine. But everything else around that, there's a lot, especially on the B2B side, operational side, which I was in, which is horrific, it's disastrous. So that's ripe for disruption, and it'll take a while, because whoever does build in that space, and look, there are some people who have already built, like you've got Guesty for the short-term rental space. These businesses are fantastic, but there's a lot of other problems that have not been solved yet within the real estate sort of sector. leveraging tech. So I think that's a space I'm excited about, because there are real problems that I've witnessed myself and felt myself, and where there are problems, there are obviously solutions which someone can monetize. But, and it's a huge but, whoever does try to monetize it and sort of do B2B sales, good luck getting through to landlords.
Yeah.
Because landlords, again, this information now for this next, what I'm about to say is more local, market related. For us, we're based in London. Dealing with landlords in London, if you're an American listener, is like dealing with a dinosaur, or even that is an understatement. They're very, they're all pessimists. They're all extremely greedy. It's like you speak to someone in tech, and
you're talking about consumers, like just.
I'm talking about landlords in London,
but smaller landlords under the larger,
even larger, but definitely smaller. They don't understand that, hey, if I'm happy to pay 5% or 10% of my monthly or annual rents or profits to outsource this because it can free my time to do more productive things with my life. They're penny pinchers is the best way to put it.
Yeah.
They're very, they're not rational. Let's put it that way. They're the most irrational beings I've ever come across.
Interesting.
So there are problems to be solved. They can be solved, but, and it's a big but, you're going to need the best biz dev and sales team in the world to get it through their heads. However, as landlords age, the landlords become those who are now, let's say, millennials. So look, all the problems that are in the real estate space in two decades from now, they'll all be, I think most of them will be solved through tech, a lot of them. So yeah, something that long term, I would invest in. I'm really optimistic about for a long term hold, which is how I hold most things anyway.
So you'd hate it if I went and started a property business to work with landlords, particularly in the B2C space, and do a co-living piece of work?
Yes. I would wish you all the luck, and I'd be there.
You'd advise me against it.
If you're going to call me for advice, I'm there, but before you do any of that...
You heard it here first.
Hey, I charge 50 grand an hour.
Getting this stuff for free.
Yeah, and then the second space I'm really excited about is, I don't know if it's the same term they use in the US, but in the UK it's called open banking.
Yeah, I think it's the same.
So open banking, who's the biggest player in the US? It's Pled. It's spelled PLAID, but you say it's Pled, I think. In the UK, it's TrueLayer. So what does TrueLayer do? So you use Revolut, right?
Yeah.
Okay, so when you use Revolut, you're trying to make a payment. Again, I might butcher some of this, but hey, when you make a payment on Revolut, have you seen when you select like send payment and it says loading and it's got that circle, the pop-up? That's TrueLayer. It's an API that connects to your bank, if that makes sense.
Yeah.
So in 2016 in the UK, Competition and Markets Authorities published a report about banking and found that all traditional banks they did not have to compete for customers, whereas new, smaller challenger banks found it difficult to access the market. So hence, customers weren't given enough choice or control of their financial information. Again, you could pretty much say it's democratizing the space, giving more freedom, more choice, encouraging competition, which I'm a huge fan of, especially in such an old school industry where the players have gotten really comfortable and there's no innovation. Even to this day, the high street UK banks, your Barclays and Lloyds and whatever, you log onto the internet banking, it looks horrific. Nothing like, let's say, a sexy interface of Revolut or these other platforms that you can use. So essentially, this regulation was introduced, make it easier for customers and SMEs to access their transaction data, compare accounts and access new products. And it gives you, it allows you to give access to regulated third-party providers to your bank account transaction data, and you can control what info is accessible and when to stop it. So, for example, well, I think there are two branches to this. One is a payments API. So if you're on, let's say, a new Fintech app and you want to make or send a payment, but then that payment needs to be sourced from your bank account with, let's say, Lloyds or Barclays, this API, application program interface, is the connection between your Fintech app and your original traditional high street bank. Payments API is one. The second of the two is data API. Data API is essentially, I mean, for example, these apps like Monzo or Plum Fintech. So Plum in the UK is an app. It's a B2C AI fintech app which is it connects to your bank account, it retrieves the data through the data API, and it automatically puts away a little bit of saving every day or every week consistently, and then it invests those savings into tech stocks or whatever, just equity markets or index funds or whatever. So they basically, through an API, they retrieve your data to leverage that data to benefit you, to save and invest more and grow your wealth.
How do they make money?
They have 2-3 different, one is, I believe it's one of their models is a fee per transaction. Someone corrects me if I'm wrong. And then they have a number of users, like a SaaS model with institutions as well.
But the other one is, so if you have a bank that essentially, a pseudo bank that essentially invests your savings or portions of your savings into the market.
Yes.
One, they're probably putting that money into index funds. But two, the way in which they make their money is either they take a cut or a sort of commission basis. But are they taking that out of the customer's account? Probably, because the customer's therefore paying for, either the customer's paying a recurring revenue type thing to have access to that type of thing, to not think about their investments and just have it go through, or they're getting paid by the bank to offer that solution to their customers as an alternative solution, which I think is pretty smart actually. So you'd invest in Proptech and Fintech basically, and in those specific areas, things that are solving the biggest problems in those.
Yes and no. So Proptech, yes, as I said, Proptech long term, anything that fixes these archaic old school problems within the property industry, anyway, from what I'm seeing in the UK anyway. I mean, we've seen in the US, Chamath with his SPAC of Open Door. Is it Open Door? What's in the UK? We have Open Rent. It's Open Door in the US. And why? Because he believes that, yes, real estate is old school. Over the next 10, 20 years, most viewings are going to shift to online viewings. Yeah. Right now, it's only 1%, but as the technology improves, you can do more viewings online.
I'm sure that will have increased during COVID as well.
For sure. So he's bullish on that. Again, that's perfectly one problem that you'd fix, because I don't want to go and meet an estate agent. I'd rather just show me quickly on camera. As you can tell, I've not had great experiences with estate agents. But, so any tech that sort of solves the problem within the old school industry that is real estate. And secondly, open banking within fintech, which is APIs that essentially allow you to retrieve data or make payments from your bank account into a more sort of user-friendly interface fintech challenger bank account that you use, i.e. let's say you've got your Revoluts, Monzos, Plums, doesn't have to be a bank, can be an app that helps you invest. So various fintech players we have in the UK, that I'm super optimistic about. Now, the key word there is, when I said the API one is payments, API one is data API, it goes back to what you said about energy data. So both are really touching on data. If we were to really end this whole episode on what we're both passionate and what really got out of this discussion, it's not so much that me and you would invest in open banking or Proptech or energies. Yes, we would. But more importantly, what underpins everything here is the world of data, which is,
invest in data centers. Is that what you're saying?
Well, I mean, it's something that really recently actually, I've started reading on to get more info on, and I wouldn't rule it out.
I mean, one of the company I work for's clients is a data center, and they build, operate, manage data centers for the big tech companies, for Fagma. And so I can tell you from experience, their business model is very focused on the customer, and their customer is obviously the Googles, Facebooks, Amazons of the world. So from that perspective, I think if everything we're saying is going back to where the data is held and where it's stored, you're going to have to invest in something that's doing that. Yeah,
look, to conclude, number of things. One, data that helps improve the quality of life. Number two, I would say, I had a great thought there, just slipped my mind.
Happens.
Number two, I would say anything that facilitates democratization. So in the case of open banking, those old school high street banks, Barclays and Lloyds, hey, there's finally competition after 200 years of you being really boring without innovation. So data, anything that facilitates democratization. and
anything that solves a real world big issue that is causing problems in society today.
an old school industry is the fourth point, which we're on, and improves the quality of life. Cool.
That went deep and philosophical. Bloody hell.
Awesome. Any final remarks?
That's me for this week.
Awesome. I think this one has been a lot more. We just got straight into it. Let us know your thoughts, because look, we're early on. It's the first few episodes, and feedback is welcome. We thrive on constructive criticism. Feel free to be as harsh as you want to be.
Yeah, roast them.
We're here to be of service. We're learning along the way. Look, as I said before, there's a lot of stuff we know, hell of a lot of stuff we don't know. And as we learn, we're here to share those learnings with you. Amazing guests are in the pipeline, and we've got a few coming on soon. So
I'd say one more thing, which is if any viewers want to challenge us on anything we've said, or want to give us any ideas for places to invest so I can make outsized returns, please do get in touch.
Or correct us on anything that we've said that you don't, well, not necessarily if you don't agree with, because I'm sure there's a lot of people that don't agree with us, but if we've said something that's factually wrong, please do correct us there as well, because we always, again, as the name of the podcast suggests, we are always seeking logic and rationality, and if there's any incorrect information, which sometimes happens, we're all human, we'd love to put a disclaimer so someone doesn't, come along after you and listen to wrong information.
Fake news.
Everything's fake news. Awesome. Catch you next week.
Peace.